Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 14th, 2025. What a pretty boring day today was. But the one thing that I had said, we're really just, we made these highs and we've just been going sideways. And I thought we were going to get a little bit of a deeper of a pullback because we had these sell signals on the 15-minute chart. But you can see really all we did was just trade within this bull flag here, which would be suggesting that we're going to get a pop to the upside. But you can see right here with us just going sideways all day today, and that's why it was really boring. We're probably going to get a sell signal triggered on the hourly chart. Now, where are we going to go for that? We could end up going. This is the resistance zone that I'm looking at. It's going to be anywhere from the 6,000 level, and we're already above the let's say the lower end. So I'm going to do this. I'm going to make this a little bit higher up and go. It's going to be anywhere from the. Okay, so let me just do this now. Okay, so it's going to really anywhere from the 59.15 up to the 6,000 level is going to be the resistance zone. And from there, that's where I believe we're going to come down and at a bare minimum close this gap. Because if we look at this, where you can count pretty easy, where we have, one, this is our two. This is either part of the three or we made a three, 4, and now we're making a 5. It can really go any way on that. I'm kind of more. Well, let's just do this. It could be 5 waves up there, but if we come down, then it would still be looking for a move where we would come down and possibly even, test this, the 55.75 level or the 55.50. So from here, there's going to be some type of decline. It's just a matter of where it goes to. Are we just going to do a 23%? That's at 57.26. I think it would be more likely that we come down and really test either the 56.30 level or down to the 55.54 level, and then maybe just do some chopping around. And again, that's pretty much what we did today with where we were looking for a sell signal on the hourly chart. We just burned off the time period of it, and that was it. So there's a chance that we just play ping pong from say the 5,600, 5,500 up to the 5,900 or 6,000, and just do that until we head out of because right now the bullish cycle should be coming to an end. So it would make sense if we got a deeper pullback than that and we just didn't play ping pong and we came down and tested the 5,400 or even the 5,300, because this would be closing that gap, and I would actually like that. So it's just a matter of where we're going to get the turn, and are we going to have to come down and back up again? I'm going to let Mr. Market talk that, let me know on that part. But right now, it's you just want to be careful. You're getting, when you see moves like this, that just goes sideways, and it's when we have sell signals, typically we're going to get a little bit of a deeper retracement down to the 58.27 or possibly even down to the 57.86. But the fact that every time we came down and really we're just testing short-term moving averages, you saw buyers stepping in. So what that tells me is that the retail traders are back in full blown here. They missed the entire move. They're now buying each dip, and it's one of the reasons why I'm throwing out red flags right now. I don't know what the catalyst will be. I don't know what's going to happen. I don't know how deep we're going to go. But right now, there's going to be some kind of shakeout. And again, I'm not even suggesting to short the market. You can take them if you're if you're active and you're at your computer. Just know where your targets are. But it's one of the things that, just like when we were at close to these levels back then, and you had all your talking heads coming on saying you're missing the move up, and that was when we were already all the way up here. I'm sorry, hang on one second. Okay, so their whole thing when we were up here is the hard trade is not being long because we're heading higher. They convinced all the peeps to just buy, and then they took the market straight down. We're starting to see that. Those same guys that didn't open their mouth here when everybody was panicking are now back saying, hey, I told you that we were going to be back up here, but you also had to sustain over 1,000-point drop on that. So it's one of the things that it's like the Groundhog's Day, the movie. It's the same thing, just repeats in and out. So we're at levels right now where I'm not even saying that we can't not go higher. We just need to shake out for those people that are coming out, and where they only come out at the tops and say that you're missing the rally instead of saying to buy on this candle here. They're saying you're going to miss it up here and saying, oh, this was a great buying opportunity, but they were already long up here. So they're praying for everybody to get in. But in any case, I am expecting some type of nail biter. I'm pretty confident that we'll find some buyers at this gap that we just made on Monday. So that's down at the 56.85 level. You can see it's also the moving averages. So if we come down, the hard part about this is that I can sit there and say, okay, here's 1, 2, 3, 4, 5, but I'm more inclined to saying this is 1, 2, and now we're making the wave 3 here, and then we come down and then back up again. So that would give us the 5 waves, and that's probably when we would see a deeper pullback that could take us somewhere down into these levels here. I really like the 52.77 to close this gap here, and give the market a rest like it does, because typically when the bulls are in control, they just keep going straight up, and they don't take a breath, and then next thing you know it, the VIX is down at 14, the put call ratio, everybody has calls, and they get wiped out. So there is warning signs. I'm just not, I think the safest thing to do is start locking in some profits, leave some on the table just in case we keep going up, because there is momentum with the economy, with geopolitical affairs, wars, the border. There's a ton of things. So there's reasons to be bullish. The one thing they're not going to have is the Fed on their side, because the Fed will probably just sit and leave rates unchanged for the foreseeable future. But in any case, the warning signs are there. I'm just not sure exactly where we make the turn. If we did it here or we gap up and then come down, that would make sense. But again, that's above my pay grade. I don't know exactly like that. But the fact that, again, we had sell signals on the 15s here, and we really just went sideways, is telling me that the retail public is in they're in full gear right now. They're afraid they're going to miss the next leg up, and typically that's when they turn the market. But in any case, this does look like a bull flag, so that is suggesting that we would head higher. And again, if we head higher, you really want to just keep an eye on the 59.15 and then up at the 6,000 level. We were in from here. So the fact that after this is when I said, let's start being a little bit on the cautious side. I'll give up the 100, 200 points. We made a huge majority of it, and now we just kind of we relax a little bit. We don't have to be looking to buy every dip. We just wait for things to play out, wait for some buy signals, and then we go from there. So anyway, and also what I'm also looking for is that if we come down and do this, I'm anticipating that we're going to start seeing some, the momentum starting to come down on the daily. And if we can get any kind of sell signal, then that's where I'd be looking at. We're going to come down a lot deeper than we are. But right now, that's not in the cards, and it may not come into the cards until October, when we're above these highs and we have the sell signals. And again, everybody's going to be pounding the table to stay in the market, but that's usually going to be when I think they're going to pull the rug out one more time. But this time right now is the cautious time, just because we're heading out of the bullish the cycle. And from there, I don't think it's going to be the big drop that I'm thinking of, but we can do and retrace, a good 400 to 500 points on the downside, and then from there make our way up into the October time period, where most likely we will be making new all-time highs, and that's when, again, you want to be a little bit on the defensive. So for tomorrow, if they take this bull flag and they jump it up, the resistance areas are at 59.15, but most likely we'll be coming up somewhere up into these levels here, the 59.76, 6,000 level. We have PPI numbers coming out tomorrow. I think non-job for payrolls. I'm not 100% sure when that is, but in any case, that we do have some market moving news, so it's probably going to make a move one way or the other, up or down. down on that. So 15-minute chart, again, just in this, if we come down, if they break this bear flag, that's when I believe we're going to come down and start testing the 58.44, but really more likely down to the 58.27 and possibly even down to the 57.78. And that may be the wave 4, and then we make the wave 5 up. But this, if I'm just reading the chart, it's saying that they're going to like the news and we're going to pop up higher, but let's just kind of wait and see on that. But the bears really need to get it through these lows here, 58.71. If they do, then we should see a move down to the 58.27. Bulls, obviously, they got to get it through this high here, break out of this flag, and get above the 59.07 to start making the moves for my upside targets. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.